Hey everyone, TG Watkins here. It is October 25th. I hope you guys are enjoying your weekend so far. Today should be an interesting video. I've actually got some seasonality charts that I want to show you, so we're going to do it a little bit differently today. And hopefully everyone survived the last week and a half, because then on Friday, the market made new all-time highs because inflation came out within expectations, and the market said, cool, we're still on track for the Fed to keep cutting rates. And so new all-time high. I hope you guys are along for the ride. Okay, so let's dive into it for a few things. So yeah, the VIX and the SPX seasonality. Let's take a look at this. This is for the VIX, and if we look at this, we can see that around August, September, October, usually we get some seasonal weakness in the market, so the VIX goes up. This year was a little bit different because the market has been so strong. And so there really wasn't much of a VIX increase until about October. So, you know, you can kind of wrap this around that. And yes, there was an increase in the VIX. We know that the VIX went up to almost $30 in pretty quick order based on the October 10th situation with the market coming down. And so I'm going to say that this basically did occur. We did get the peak in October for the VIX. And now we should be having the VIX come down, which should be bullish for the market. So happy to see that. And then if we come over here and we look at the seasonality, and let's kind of look at this first, and then I'll see if I can put it side by side with the charts. Actually, this would just be so much better if I just have it right next to each other with the charts. Let me get this real quick for us. And then we do this one. So the thing that I'm seeing here, let's kind of zoom in a little bit further. There you go. That'll work nicely. And if we look in through here, what I'm seeing is August. So we got August. We can see that there was a little bit of weakness in through here. Well, what happened on August? We got that, you know, we went from July to August. On that day, market went straight down. You can see it basically right there, and that began our little bit of weakness. Yes, the market rallied, but you can ultimately see market kind of went sideways for that. And then you can actually see in September, we did get a bump right through here, and look at September. We also got a bump to the upside. Maybe it extended a little bit further. You can kind of argue that it went into October. That's fair. And then look at October. We get some more downside and then a little bit upside. Well, there's our downside in October, which happened October 10th. And now we're back to the upside and back to the upside for the seasonality. So I'd actually say this seasonality chart worked out pretty well as far as what to expect with the market. So yeah, I thought that was a really neat thing for us to kind of look at and see. And I think now people are expecting a strong move into the end of the year, probably 7,000, 7,100 for the SPX. We never know what it's going to look like. There could be bumps along the way. And what I'm going to be talking to my subscribers about is that we do have a good run, I think, into the end of the year. But really the question is, what do we have? What happens after the end of the year? So January, February, March of next year. I've got some ideas. I'm starting to formulate some ideas and processes, plans of what to do about our positions and how to tackle this. So if you guys are interested, be sure to join the Moxie room. I've got some information about that coming up. And then let's see, we'll come over to here. Let me get this moved around for us. Get rid of that. Yeah, and Trump and Xi meet, what is it, the next week sometime. I want to say the 30th or 31st. I should probably get the date exactly. But they are going to be meeting next week. So I think this is progress. We know there's been some turbulence, right? Some whatever been going on. That is part of why the market went down October 10th, was because Trump said some strong words against China based on some export restrictions and whatnot. And then there was a lot more kind of talking back and forth, you know, just kind of negotiating, strong arming, whatever you want to say, and through here. And then the market kind of said, oh, okay, well, maybe we got this all figured out and we'll keep going higher. So I think that the Trump and Xi meeting should be good. I would imagine Trump is probably going to say good things about it, unless it's an absolute disaster. Of course, we don't really know. And then if it is good, I think that will be good for the market, because, you know, the market doesn't like these trade tensions, and that's part of why these things went down. So if we get good news from that meeting, I think it will continue to be good stuff coming along. It kind of reminds me of when we had the whole tariff tantrum lows. Remember that this big move right here was when Besant and China met, and they also had a good meeting. So I think good meetings with China seem to be good for the market, and that is how I am going to be taking that. Okay, and then remember, since you guys are watching this on YouTube, to like and subscribe. That way you make sure you keep getting these videos. And then the Moxie sale does end October 30th. So not quite the end of the month. It's one day before the end of the month. I just want to show you guys why you might want to join the Moxie room. If you look here, these are the kind of success that I have been having in the Moxie room. If you guys remember, $38,000 into $683,000. It was a 2,061% gain exactly on the tariff tantrum lows. You can see when I bought and sold it. There you go, sold it right there. And absolutely nailed the bottom of this. And then since then, I have another account that I've been trading $140,000 to $725,000. That's 420% in 6 months. And this has been a combination of stock and options. No day trading on this one particularly, but yeah, it's been really good. So I want to make sure that you guys know that this is what we've been doing inside of the Moxie room. Therefore, if you guys are interested in joining the Moxie room or getting the indicator or getting any of the long-term Moxie setups that I use that teach, if you guys have bigger accounts and you want to just catch the wave and don't want to be too active with trading, I teach you how to do that. And if you want to be really active, I teach you how I look at 0 DTE day trading on the SPX. And I'm telling you, I see it differently than most other people, and the way that I've done it really has actually made me a better options trader, and I think better trader overall by actually looking at this day trading stuff. So most people, no lie, I've been looking at the stats here. I actually have 84% of purchases have been the pro version. So I think a lot of people are seeing that this is the most value, the most bang for the buck, and you get the most there. And really, if you guys are going to be taking trading seriously, you come in here, you stick around for a year, you're going to learn a lot. You guys see a lot of people who talk about me. I'm really here for you. I'm real. I teach. I show you guys everything I do. And once you're in, you're great. So just, the market's really good. Stick around for a year. It'll be the best for you. And you'll be able to have a good time inside of the Moxie room as well. Okay. So remember, just October 30th is the end of this particular sale. So let's dive into the SPX. We'll do the indices, a couple other things, and then we'll show you some stocks down at the bottom in through here. So if we come over to the SPX, let me kind of zoom in on a couple things. And if you guys have been watching some of my previous videos, you know that we were able to take advantage of this big down move in the SPX based on October 10th, Trump kind of saying some stuff. Then we were able to take a bullish trade here. We made 65% off of a put credit spread. We did that. And then I had one little misstep here. I was putting on some downside exposure for hedges. I'm still very long on a lot of things, but I was concerned that the market might go down a little bit further, which I think was fair. Because if you look at the overnight or the futures that Thursday into Friday, the market did go down much further. It was a combination of Trump saying some things, and it was a combination of the banks and the financials having some problems too. But it rebounded, so I took off part of my hedge then, and I took the other part of my hedge off up there. And then what I did instead, because I figured there should have been a pullback, we put on a call credit spread up here, and then we cashed it out in here when we got that pullback, and we got that for 60 or 65%. So we made up for any of the losses I made on the hedges, so I'm happy about that. And then we went shopping on Thursday, and then the market broke out to new all-time highs on Friday. So we've just been killing it inside of the room. It's kind of funny. Everyone sees me throwing on a bunch of trades. They're like, whoa, TG's going shopping. Must be good. Yes, it is good. Notice that we've got the Moxie price trigger firing on the hourly chart. And really, what can you say about new all-time highs? And we are in a squeeze. So I'm very happy about what I'm seeing in through here and how we are taking advantage of this market. I still think that even though the SPX is making new all-time highs, there are a lot of names that are still setting up. That's what I'm going to show you guys at the end of the video today. Some individual tickers that, even though the market's up, they're still turning. And I think there's still going to be lots of opportunity to get into this market and carry it into the end of the year. Okay, then we can look at the QQQ. Basically the same story. We had our major pullback here. We had another pullback here on Wednesday, I think. You can see some divergence here, and then market's just all-time high. So NASDAQ and SPX are kind of trading the same. The IWM was a little challenging. You can see it has been just very, very messy in through here. That's okay. But if you look at the daily chart, really not too much to complain about. All that choppiness has really just been sideways. And you can see that the 8 stayed over the 21 the entire time and basically flagged into the daily 50. So again, there's really not too much to worry about. You could even make the argument that we had our double bottom in through here and that we had our divergence up in here. And I'm just waiting for, probably Monday or Tuesday, the Moxie Indicator will fire green. And again, we have a squeeze here on the IWM. So I don't see anything bad here. And then if we look at the SMH, this is also mostly played out the way that I was looking for. the first thing, and again, with the Moxie indicator, there was your Moxie price trigger to the downside. And when price was up here, I said, I think that the market needs another pullback, because if you look at things like the SMH, the semiconductors, we have price over the 50, but the Moxie indicator below 0. That's not a proper setup. It's what I call an inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below 0. And that told me we're probably going to get another pullback. And boom, there was our pullback. That went right to the 21 twice. And I said, ultimately, I think it's just going to be another flag. And that's basically what that was. And now we've springboarded back to the upside. So any kind of backing and filling from this point, I think, will be constructive. And really, as I said, you can just see, here was a flag and here was a flag. So more or less kind of the same situation in through here. We can also look at FNGS, which is the ETF for the FANG stocks. And I put this out there last week. I said, yeah, it's been a little bit challenging. It's kind of confusing in through here. It doesn't look great, but it's been holding the daily 50, and then it kind of popped up. And then we got our pullback, and since then, just ignore the Moxie indicator on the daily chart. You can see we've gone green again. I think this is just because this ETF has been going sideways for so long that just momentum has come out of it. So what we're looking for is the Moxie indicator to go green again. And because it's a daily chart, it takes a couple days for this to happen. But what you can see is that we now have a fresh Moxie price trigger on the hourly chart. This is why I use multiple time frames, because if you're only looking at one time frame, you're not seeing the whole picture. And if you're only looking at the daily time frame, it's going to be too slow, and you won't see the actual turn on these lower time frames, which is why I incorporate them. And you can clearly see we are getting bullishness on the hourly chart, even the 15-minute chart, which is something I pointed out to the Moxie traders. But yeah, you can see here, holding the daily 50, we've got a squeeze. The Moxie indicator is going to come back up. This too, the FANG stocks are also looking nice. Okay, they're finally starting to come out and move. We can look at ARKK. This too, last week I said, hey, I think we're going to get another pullback for the same reason. Look at price over the hourly 50. Notice the Moxie indicator below 0. So I don't think this thing's ready to go yet. And I said it's probably going to do a flag, kind of something like this. One was longer, one shorter. But yeah, you can just see it's flagging. It's been choppy, but it's just flagging. It went from being really, really overbought to now just flagging. This looks good. This looks really, really good. And the fact that we had pretty much, here's your level, and now we're right back up. I'm looking for follow through. Any kind of little pullbacks and tests of support should hold and continue to see something like ARKK move up, which is awesome. I'm happy to see that. Okay, then let's look into breadth for a moment. And the thing in through here that we can see is that breadth actually is looking pretty good. And the other thing that I have been mentioning, and I almost actually scratching my head on last week, was when the market went down on Wednesday. If you guys remember, we had a lot of the kind of speculative small cap names really get hit mid last week. Breadth did not budge. And I was like, ooh, that's interesting. So all the stuff that we saw, and a lot of people kind of pointing out that the uraniums, the nuclears, some of the AI stuff, the power generation, like whatever, they really got hit last week. But if you look, breadth did not get hit. And so I was like, oh, okay, this is kind of the speculative stuff. This is really kind of only a few things. It's not broad-based. And in fact, what we could see is we had a higher low on breadth, and we had a higher low on breadth, and it's actually starting to recover. So this was telling me that the market was actually starting to get back on board. And that's good, because you could see that breadth has been kind of coming down a little bit, and now I want to see if this can continue to move higher. Same thing here. Breadth has kind of been moving down over the last few months, and I want to see if we can continue to move higher. So this is all good stuff as long as it continues. Now, if we look at the VIX in through here, the Moxie indicator, and the way that I trade and how I teach you guys and show you stuff was giving us a heads up. We saw this VIX start to build, and I was like, ooh, something's going on, like something's going to happen. And it did happen. We did get the VIX to spike to almost 30, like $29, and we did get the SPX to drop hard. And then since then, it did its blow off top, and it's been moving down ever since. And as long as this doesn't want to set up again bullishly, I think we've got tailwinds for the market, and it looks pretty good. And basically the same story is for the UVIX as well. All right, then we can look at XLF. And I covered this last week, and I said, for as much as this looks bad, and yes, this is part of what is driving the market lower and has caused some of the problems, I said last week, I was like, I think this is looking pretty low. I think this is very extreme. and that there were some concerns about a couple of banks that were showing some bad things, but it didn't look structural. And I think traders and investors kind of read these reports, got ahead of themselves, panicked a little bit, and then it really wasn't as bad as it seems. And you can see that they've rebounded. In fact, you can see there's an inverse head and shoulders, and it's now back up. So they're not out of the woods, but I have a feeling that this is the low, and we should see if these can start to regain and recover. And you can kind of see the same thing with KRE. So the regional banks, same deal. You know, there was some fear and some panic in through here, but look, there's your big volume spike right at the lows. And I think that was a flush out low, and now you've recovered. So as I said, they're not out of the woods yet. It's still kind of early, but I have the feeling that the low is in, and we should see these things start to recover. And I think that is part of what happened last week, and I think that is part of what helped just flush things out, get them down, wash out the weak hands, and actually help get this market going back to the upside. I'll show you some more things about that concept. So let me show you the tickers that we're going to be going over here. If you guys want to look at this, we're going to gold, Bitcoin, Ethereum, all that kind of stuff, and some other notable names if you want to pause this or take a screenshot for a second. Okay, so gold. Gold was also getting really frothy. I mean, there's all sorts of stats that are going on with gold. How much money or equity or whatever is coming into it, how many people are buying it, it's been crazy. And the fact that everybody was talking about it, and the fact that this thing was starting to get pretty much parabolic, was telling me, I think this is getting pretty close to the top. And so I didn't trade gold specifically. I did short GDX, but I was looking at this and I told everyone, I was like, I'd be careful. If you're long gold, I'd be real careful. The real thing, and here's the tricky thing, if you just look at GLD, it doesn't really tell the whole story. You have to look at the gold futures, or you have to turn on the overnight for gold, because look at the overnight. There's your double top right there. So the futures actually showed you had a double top, whereas you just don't quite see that in the regular hours. So kind of interesting, and I guess that's one of the reasons why sometimes you might want to cross-check something like this that is actually so global. You might want to actually look at the futures, because they could actually tell you a little bit more information. So there's GLD and GDX. I actually shorted GDXU, and we got 27%. So I originally shorted it here. It did bounce on me, and so it was definitely against me for a while. But based on my experience and just skill and being in this game for a while, I had a feeling I needed to just hang on to this one for a little bit. I didn't load the boat on that. And I said, we need to wait for the next opportunity. And right here, when it bounced on the way down, was where I took the other opportunity. I added to the position. And then you can see the very next day, it went absolutely straight down. So perfect secondary trade on that one. I think we got about 27% gain and 33% gain on the downside on GDXU, because we shorted that. So I'm happy about that. GDX went directly to the daily 50, which is what I was looking for. And I just said, hey, great, I made my trade, I'm out. Now we just move on and see what else happens. I don't really know what's going to happen next with gold. It could go lower, it could bounce. I just don't really know. I don't really care right now. Okay, so then let's kind of talk about the crypto coins, because I think gold has really kind of been sucking the air out of the room for a lot of things. I think just so much attention has been going towards it, and so much money has been going into it. And since some of the stocks and the market was kind of looking a little turbulent, and we had some politics and stuff, I think gold was really kind of just sucking up a lot of stuff and taking the air out of the room. But now that gold seems to have broken down and might need to rest for a while, equity, money, cash might be actually coming out of gold and going into other things. So let's take a look at IBIT, which is Bitcoin. And this was the other thing that I said. It was either last week or the week before. I'm pretty sure it was last week. I also said at the very end of my video last week, I said, look, Bitcoin got hit hard. Okay, biggest liquidation event in years or something like that. But I said, I think this is also getting pretty stretched. I think this is very, very extended to the downside. And I think that this is about to bounce, or at least not go lower. And if it does bounce, I don't think the market goes down if Bitcoin bounces. And that's exactly what happened. The market went up, Bitcoin went up, and now I think what this is doing is it's hammering out a low, and you can actually see prices now on top of these moving averages, and I'm looking for them to start moving back up. I think Bitcoin's going to start moving back up. I think the market's moving back up. And if we look at Ethereum, and through here, I think Ethereum also, if you look here, you can see it's now on some support. So you can see right there, hitting some support. And I think this is putting in a low, and I think it's going to start turning back up too. And if you just look at the weekly chart, also on Ethereum, what's it doing? It's sitting right on a moving average support as well for the weekly chart. So I think these things are going to start moving up. We have numerous trades based on Ethereum or crypto type plays. Yeah, we've got a lot going on. And there's one in particular that I've been talking about a lot. And I think that is going to start moving up quite a bit once Ethereum gets going too. So I'm very, very excited for the end of the year. This is why if you guys are not part of the Moxie room, you need to come on over, because I think we are going to have a very, very successful and festive run into the end of the year. And I think things are just beginning, because if you look at Ethereum, this is, I think, a bottom. You know, like we had this big move to the downside. I think if this holds, we're going to start getting a move to the upside, and you want to make sure that you are taking advantage of that. And that's where I can help you if you guys come into the Moxie room. So remember, simplertrading.com/MIM for Moxie Indicator Mastery. And that's how you can find more about me. Okay, Tesla. Tesla had earnings. I was a little bit concerned that Tesla was a little elevated. You know, I'm pretty far away from moving averages. It also had a $30 expected move, which was a lot. And so I put on a butterfly for 400 as a center strike to act as insurance and protection. It did move down. I sold that. I bought back that, or at least I sold the puts on that protection. We made a few bucks. We bought it for $1.70, sold it for $2.50. So, you know, not too bad. Made a few bucks on that thing. And then the market went right back up. So very, very happy with the action. Friday was down. That's okay. This is really just sideways. I don't see a problem here. It is a squeeze and it's building. And actually, if you look at the Moxie Indicator, it's not ready yet. So I think it's waiting for a little bit more. Whether it is the Optimus event November 6th, whether it's just the market in general, I don't know. Tesla's kind of on its own schedule. But I think that this move right here was just so big, it's having to digest it and probably just waiting for more information. And again, look at the Moxie Indicator. It's not quite ready. So I'm okay with this. And our strategies and our plays are set up to take advantage of longer term moves since it's in a consolidation factor. Okay, if we look at NBIS, this was another one of those things. If you guys want to look out the video that I made on Wednesday that I put out, it was talking about the short side. It was talking about how to not be surprised when things like this that are up so high suddenly pull back so hard. But the other side of it is, if you are short or if you're taking advantage of this, don't overstay your welcome. When you get a big move to the downside like this, they don't stay forever. And look what it did. It perfectly hit the daily 50 and it came into prior support. Of course it's going to bounce. So that is what you need to be. If you're going to be a short seller and trade things to the downside, you do need to be kind of quick and you need to be aware of these things. You know, don't get greedy. You really just can't get greedy on the downside, especially when we are in a bull market and these things are going up a lot. So you can profit on the downside, just be fast about it. Okay, so NBIS came down, bounced. I'm still going to let this thing settle. I am still bullish on NBIS. I don't have a position. If I'm looking for one, I think I need to wait a little bit. This has just been a V move, and I don't quite see the things that I want to yet to get into something like this, so I'll wait a little bit. Same thing with RGTI. I don't know if these things are a little bit overdone for now. They might need to rest a little bit. They might need to flag. I mean, look at, you look at, Bitcoin has been kind of choppy for a while. You can look at Tesla. So these things might need to rest for a little bit. I'm not going to be too much of a hurry to jump into this. Kind of the same thing with gold. Gold came down pretty hard, might need to rest for a little bit. But yeah, you can see big move to the downside, bounce a little bit. And now you just need to let the charts kind of sort themselves out. Just let these things rest for a little bit. If you want to day trade them, great. But as far as like, oh yeah, I'm going to buy the dip and have them go right back up, just wait. We're not entirely sure yet. And you can see OKLO doing the same thing. Basically, the story behind these things, they just got a little too frothy. You know, they just really got ahead of themselves. Everything was going haywire. They just got really, really far up there, and they just got, the risk to reward is not favorable. And so they got pulled down hard, which is good. I'm happy about this because I think it's healthy for the market. We can't keep having things just going straight up like that. You bring them back down to reality, you let them digest, you let them rest for a little bit, and then we'll see what happens later. You know, you get big moves and then you get to rest. You get a big move and you have it rest. Just give it some time. Okay, and then let's look at TEM. So despite the market pulling back over the last couple weeks, there have been some tickers that have been pulling back, but I think these things are looking good. I am still in something like TEM, and I'm looking to add because I think that this is a perfectly healthy pullback. I don't see anything disastrous about it. I think it came right back to the daily 50. I think it came right back into a range. I think this is all looking good, and I'm just waiting for the exact right moment to add a little bit more into my TEM trade because I think this thing is going much higher. And things like grab, we can look at this too. I know that some people have been watching Twitter, and some people are having to kind of coach each other and be like, look guys, it's just the algorithms kind of getting here, and like, we still have a bigger picture, and it's, just, I don't know why it's down like this. It made its biggest move ever and they sent it down here. It's like, guys, this is also like technical trading 101. Look how fast this thing went up like this. Look at the gap between the moving averages. It really, all it did is it come back down to moving average. Okay, this actually looks really good. This is really good. We want things like this. And if you zoom out a little bit, where did price come back down to? Back into range. I don't see anything wrong with this. In fact, I would like to add. I think this is looking really good. And if you want to be in something like grab, I think this is your opportunity. Okay, so I'm very excited about this. I'm still looking for, again, a little kind of movement in through here, and I have a couple things I'm looking for before I really jump into this more. But I think you could start building a position right here. Should be good, and hopefully earnings goes well. Okay, then Dave, looking at DAVE. And as I have said before, the market looked like it had been coming down for a while, and I put Dave on a few videos recently, watch lists videos and simpler trading videos, whatever. And I said, Dave, yes, had a huge move like this, like I showed you with RGTI or NBIS, and they might need to digest for a while. That's really the question: is how long do they need to rest? Dave needed to rest for quite some time, but if you look here, this is now a perfect entry on something like this, and it is actually moving ahead of the market. It started to move up before the market actually broke out. And this is why when you look at the market, you need to look around at a lot of different places, because each of these stocks are going to be kind of moving on their own. And you can see that some of them are really getting ready. And Dave has been one of those. I've been talking about this name for easily the last 2 solid weeks, saying I think this name is actually starting to look good. And I think there's an opportunity here. You can see the Moxie Indicator is doing well, and it's basically just been flagging for quite some time, and I think it's going to start moving up. So Dave has been another name on our list, and how well we have been doing with it. Okay, now remember, if you come over here, if you guys have not picked up anything with the Moxie Room or the Moxie Indicator or any of my classes, remember you've got just 5 more days. You have 5 more days until the sale ends. Come over to simplertrading.com/MIM. It stands for Moxie Indicator Mastery. And really, I got 84% of people have been buying the Pro version, which gets you everything. And if you guys do happen to already have the Moxie Indicator, just call or talk to our customer support. They'll hook you up, make sure that you don't overpay for anything that you already have. Okay? So any questions directed to them, I would love to see you guys come into the Moxie Room. We are having an absolute field day with this market, and we are riding all the twists and turns and just having a good time. So I hope I can help you in there. If you guys have questions, feel free to ask them when you're in the room. I am here to help you, and that's what we do. So we'll see you guys soon. Thanks again.